All right, guys, welcome back to the channel. Bitcoin is still hovering at 104 over the last 8 days. We've gone nowhere. We'll talk about why this is happening, what we could expect if we get a breakout of the high here at 105, the price targets that I'm looking out for and why, the probabilities there as well. But the bigger one here, we're looking at the macro cycle, looking at the 18-year cycle, and more importantly, 2025, something that has never happened in history, going back 149 years. Hit the like button, subscribe to the channel if you're new here, and check out TIA Premium if you want to learn more about short-term trading on stocks and crypto and Bitcoin, of course, and your long-term trading and investing strategies. That's your long-term funds there as well. We don't just do the short-term here. Okay, so let's just kick it off with the never happened in 149 years. We'll cover it off, get out of the way, because this is looking nice for the bull market to continue on in 2025. This is for the stock markets. And of course, my view is if we're still seeing positivity, bullish signs, recessions being canceled, on again, off again type news headlines, then I suspect we'll continue to see positive signs for Bitcoin and crypto. But, and the big but, is that there are going to come drawdowns, of course, meaning you could see multiple days or weeks that the price declines for the stock market, for Bitcoin, and of course that would go without say for altcoins, who go up pretty heavily, pretty quickly, and then get absolutely slaughtered again. So I still think it's the time in the market for short, if you're doing trading altcoins and it's short-term trading, so have an idea where you're going to get in and get out. So the statistics show, at least for the last 149 years, for the S&P 500 at least, the leading stock market for the globe, is that in the year 5, so the years ending in 5 in the decennial cycles, so the 10-year cycles, we haven't seen a red year since 1875. And that red year was negative 3.75. You can see the data up here, 3.74% to the downside. We can have a look at 1885 was up, 1895, 1905, so on. So there's 15, 25 leading into that mega boom. 1935, so that was after the massive crash of 4 years there, going down 90%. 1935 was up. 1945, when the Second World War ended. Even 1915, when the First World War started, was up. 55 up, 65 up, 75 up, 1985 up, 1995, huge boom there, that was up. 2005, up. And in some instances, you may see charts that have it slightly red, like here in 2015. So it's negative 0.73. But when you adjust for the dividends that are paid out, then you get a green year. So you might say, well, that's BS. It's happened. It happened 10 years ago. And it also happened 20 years ago. You had a negative 0.7% down. So if we were to get negative 0.7% down here, well, this is basically where the stock market would end at the end of this year. So we're currently sitting at 0.6, so somewhere around the 5,900 level. And that, the idea here is sparked because we've just turned green on the year today. So this is 2025. We turned to green as it broke back through the open there at 5,903. Today it's 5,916. And I also pointed out on X that this is the third time in the last 5 years, 1, 2, 3, 4, 5, that you've seen the stock market wipe out all of the previous year's gains and then come all the way back roughly within 12 months. You can see 2020 wiped out 2019. So here it is. Wiped it out, came back. There is 2021. 2022 wiped it out. And then 2023 basically took it all back again. 2024 ran up. 2025 wiped it out. Let's take it off logarithmic. So we're back on linear. Wiped it out and got it all back as of today. So we're only 5 months, less than 5 months into the year, and it's happened again. So when we adjust for the dividends, that's essentially the negative years since 1970 odd. So going back about 55 years. So you have 9 negatives, and the rest of the years are basically positive. The worst streak was 2000, 2001, 2002, then of course 2008, and everything since then has basically been up except 2022 and 2018. So some pretty significant data with the probabilities that would suggest we'd still see higher prices in 2025. Further to go in the bull market, further to go in your favorite cycle that we cover here, the 18.6 year cycle that leads us into this peak. Generally, at the end of these peaks, it's quite a severe correction, especially when we're looking at it globally. And I know for the Aussies, they sort of look back to 2008 and think, well, it didn't happen here. We're going to be okay. We've got all this immigration coming into the country. Real estate's never going to go down. It's usually a bit of a sign that things are, eventually they'll peak and we'll probably see some sort of correction as well. But more on that later. We're just looking towards the end of the cycle, leading into this peak. So far, the data suggests we've got further to go, especially once since we've taken out the highs here and the swing tops. So some significant resistance levels will, well, at this stage, may eventually become support. We've also tested those levels just yesterday, came back 58.60 and a little swing low here, and then closed higher. Still a little gap to fill here. Let's take a look at it on the futures market. Yeah, another little swing back to the highs, and it's continued to close higher here. So it would suggest we're going to get a new all-time high, I guess, can we say sometime in 2025? Either way, I guess a month ago, it seemed very unlikely that it would be a new all-time high. And a month ago, according to Charlie's X, he did a poll about the recession. So 14,000 votes. Will the US economy fall into a recession in 2025? April 8th, that was the day after the low. Yes, 67%. So basically 2/3 of people thought yes, we'll get a recession. 1/3 of people said no. Take it forward 5 weeks. Will the US economy, the exact same question, will fall into a recession in 2025? Now we have yes, basically almost completely flipped. 1/3 of people yes, 2/3 of people no, and interestingly enough, only half the amount of votes. More people are interested in knowing what's going on or knowing about the news at the lows, you know, this fear about recession. And I think that sort of weighs very much into how the media looks at the financial markets, and then how the everyday investor typically looks at the financial markets. And they've probably lost interest now that the market has gone up. And I definitely hear of people waiting for the market to come back and take out some sort of price point that they think they can just swoop up again and buy the low and then run it back up. And that's not how the markets work. Typically, if people are thinking like that, it's probably going to keep going up in their face, continue to grind higher. That's basically what happened through 2023, 2024. It kept going up. We had a lot of people expecting it to go down, take out some lows, and then run back up. That could be the same mentality that's happening in Bitcoin right now, as it continues to flirt with $104,000. So I've got Bitcoin, some altcoins to get into, and the crypto data as well. So let's just take a quick look at where Bitcoin sits in relation to the US dollar cycle, and where the US dollar cycle sits in relation to the 18-year cycle. The second half of the 18-year cycle, so it's this period here, 7 years, second half, roughly from about 2020 leading into the peak here, 2026-ish. The US dollar typically declines. So there is 2022, and we're at this declining stage now for the last few years. The last cycle, we also saw the same thing happen. Here is your peak. There's 2000 into 2002. So the peak took about 2 years, kind of like what's happened here to 2022. And we got a peak here 2025. And then it basically got absolutely slaughtered to the downside. And then you can take it back to the cycle before that. And in the 80s, it also got slaughtered, consolidated around the low of the US real estate and economic cycle. So around the 90s, you can see the dates, 93, take it back to the cycle here. There you go. Roughly around 92, 93 was the low. And from that point, you can start to see forward what might be coming from the real estate cycle and the economy. The stock market will generally give you a sign earlier than that. You'll start to see a bottom in the stock market. But for the majority of people, they don't see it because of how bad real estate's doing. And, you know, it's the price of their house. and how bad the economy is doing. Yet the stock market is forward thinking. It's pricing in the gains of the future, and it looks like they're around the corner. So when people talk about earnings and they see an earnings release today and the price goes up or down, it's absolutely ridiculous to think that just because there was an earnings announcement on the day, that's going to influence or heavily influence the price in the 6 to 12 months time. Those earnings announcements were already known by the insiders. Someone's got to put it together, and it's known well before that time as well. And they know how well their profits or their losses, of course, are going to do coming into that quarterly report. So that's why that stuff is just absolute garbage. Anyway, that's a side rant. You get one of those usually every video. But here we are, Bitcoin going up, US dollar going down. This takes us back to the beginning, or the Genesis cycle here, as Michael likes to call it, for Bitcoin. US dollar down, Bitcoin up, US dollar sideways, Bitcoin up, US dollar skyrockets, Bitcoin collapses, US dollar sideways, Bitcoin climbs, US dollar down, Bitcoin climbs, so on and so forth. And here we find ourselves now with US dollar declining, Bitcoin going up, US dollar sideways, Bitcoin going up. Had a couple of months here where Bitcoin was down and US dollar was down and Bitcoin was down. So this was through the period of February, March into the low of April. And now we're starting to find ourselves turn around and come back relatively strong from this low. I said I would also cover the economy, looking at the 10-year yields and the bond as well, to see how that's all progressing within the 18-year cycle, and how bullish the market is still looking into this peak, but we're still seeing those cracks overall. 10-year yields have been rising. Yes, the last 24 hours saw a pretty reasonable decline here of negative 2.4%. So this will remain on the radar. The yields have started to drop off there on the bonds, and the bonds just had a nice day up there as well, although overall are pretty well down since April peak there, 121 all the way down to about 113. So what does this mean for Bitcoin and cryptos after we've taken a nice solid look there at the markets, traditional markets? Well, the sentiment, it continues to drop off here, even though price for now is still holding up. Google Trends with crypto and Bitcoin, we've been watching this. It's part of the analysis that we do here very, very regularly on the channel. And unless we see a significant breakout of the search volume for people searching for Bitcoin and crypto, it's unlikely that we're going to get a big boom to the upside. Bitcoin can rise, and of course that's what's happened. But going back to yesterday's, we got the full data for yesterday. Bitcoin has dropped from 51 down to 40, and crypto has also dropped off as well. So it doesn't mean that the peak is in and the whole thing's over. This is just a short-term look at the sentiment, and we're still waiting for the sentiment to continue to build, and that's why we take it out to 12 months and 5 years, and just take a look at where these lows are forming. And so when we see the overall trend for the last 12 months, we can see the weekly data here. The trend is still up for the search term. So a day-to-day might be down, might be just sort of doing not much, but taking it back, you can see that we are on an uptrend here, and it's starting to break out of some of the highs. You've got 36 for Bitcoin going back to April, and now 3 weeks later we're at 36 again after dropping off to 30. So there is some renewed interest here. I'd be very interested if we can break past these highs of April when we got the sharp low to $74,000. That's at 49, and then the other peaks there in March are around 56. So if the search volume can start to break out of that, you would have more people searching for Bitcoin than what we did back at those price points. And the 5-year data, Bitcoin and crypto, is also on the rise here as well. And around this period a couple of weeks ago, around this point on the chart a couple of weeks ago, we were watching for the low, or a low, to hopefully come in on time, fingers crossed, because the search volume was starting to dry up so much that it was coming back to the search volume of October 2024. So that was before Bitcoin broke out to a new all-time high. So it was really starting to dry up, and we, for whatever reason, humans repeated it. They put in a somewhat of a solid low and then brought that search volume back, almost like clockwork. And they're doing the same thing with the exchange volume. Look at this, breaking out of those highs. You guys have been tracking this with us on the channel, I hope, subscribing, liking to the content, watching how the cogs begin to come back to a market that seemed like it was absolutely dead. And we're starting to see this come back now on the exchange volume. So more people are interested, more people are trading. Probably we got higher highs and the lows forming here, and they're probably getting liquidated along the way. We can see the last 24 hours about $500 million. So for whatever reason, people are getting liquidated, more and more people are still coming. So $500 million is relatively, it's above average, not extreme. So it's still, I think it's still a significant amount that are trading in the markets in the last 24 hours and getting wiped out on their longs. And we can see that on the chart. Just with this tiny little move to the downside, it wasn't enough to break the low of the 12th of May, and then it closed higher as well. So this now takes us to BTC, and let's have a look at some of the price analysis, and then the big one, the USDT dominance, and how it's now still holding up on its nearly 8-year support line. We want to see this thing get slaughtered. You want to see the US dollar come out. So I'll get onto that in just a sec. So onto BTC now and the price action here, looking at some of those targets to the upside. I started with the traditional markets, looking at the cycle overall, because things are still looking positive. Yes, we're going to get days to days where things are up and down. People are like, it's bearish one day, it's bullish the next day. Look, it's the same thing the 18-year cycle has said to us for the last 14 years. The market is up. In 22 and 23, for the stock markets, everyone thought it was the game over. And we were here years ago saying it is not game over yet. The 18-year cycle is not over yet. So the macro still up. Bitcoin, is it going to follow suit? At this stage, it looks like it, but I wouldn't expect Bitcoin to peak at the same time that the stock market does, or even the same time that the real estate and the economy peaks. And if that peak is due sometime around 2026, let's call it the first half of 2026 for this real estate and economic cycle that I've been looking back here, then, well, Bitcoin hasn't been through an 18-year cycle before. So being conservative, I would look for a peak in Bitcoin before that happens. So before the peak, sometime in the first half of 2026. If we're lucky, maybe this thing peaks in the first half, maybe Q1. But yeah, I'm looking out for something this year, because then I think we'll see the real estate and the economy peak, and then I think we'll see the stock markets peak, whether that's second half of 2026 or maybe it runs into 2027. But generally, you'll see the stock market peak after the 18-year cycle peak. So this is for the US real estate and economic cycle peak. That is what has been shown for over the last roughly 200 years. So that's the data there. You got two rants in today's video, looking at the macro cycle and how we can position ourselves for the end of it and obviously the coming correction, which of course is my opinion. Bitcoin, short term, 50% levels at 105,000. We have been rejected once, twice, 3 times, 4 times. Looking to try and get this on the 5th time on the daily chart at least. If BTC is able to break through this level, then my next target, of course, you've got the highs here around 108 to 109, but the 75% of our swing move here takes us out to 111. Now, if this is going to do a repeat of this 100%, that'll take you to 117 for a round number. 117,000, pretty wild. But there is look, there's still a lot of work to do on both sides. It's always the case now that we're at such high prices because of the resistance levels overhead. This first diagonal that the market has been sitting on and respecting, so resistance becoming support, were the two previous all-time highs. So you had April and November 2021. So I've connected the dots, run that line across. Bitcoin held up, then crashed back down. This time it broke above and sat on top of it. So we didn't even see a couple of days close underneath it in a row. Just one day underneath, and then it's held above that line. So it's a pretty significant line now. And the move to the upside will then take us to the next significant level, all-time high, all-time high, all-time high. So we're connecting 3 all-time highs now. And that level, should it happen, say today, you're at around 113 for a resistance point. And of course, that level is going to keep rising the longer out in time that we go. So if we do get some consolidation and it takes a little longer, then we're looking out towards 116 and so on, right? We take this thing out to the end of the year, 119. And it seems ridiculous to think that Bitcoin would only get to that point. I don't know if that's the case. Maybe we do actually go high and we hit the 130s like we've been looking at with previous price price extensions for this extreme move that we've already been experiencing. But this move out of the low from Bitcoin, 74K to the current high here at 105, has been the fastest move. So that's the update on Bitcoin for the short term, the long term, the price projections, and how we're balancing the strength and the weakness, checking out the market. Are we in a strong position, neutral, or weak position, what we have coming up? Now, the biggest chart that I'm following to give us some sort of guide here is USDT dominance. It's still holding up above the 7-year support line on the daily. We've seen it hit the support, come back up to the 50% at 4.75, and again, it chooses to be between a rock and an extremely hard place. The bulls obviously want to see this thing break down. You don't want to see this hang out here too much longer. You need to see a break soon underneath these lows, underneath about 4.5%. Otherwise, we're then at risk of breaking back above 4.7 and then consolidating above that 50%. That would be one of the first signs that we're probably going to see a decline for Bitcoin and altcoins. Altcoins will likely get slaughtered more, ETH and the others that have run relatively well over the last few weeks, but it hasn't happened yet. That's what we need to look out for. If that breaks above, things are going to get slaughtered. There's just no other way around it. Some people don't want to hear the bad news. Well, the news that their portfolios are going down again, that's just simple maths. More money will have to go into USDT dominance to push the dominance up, and it's got to come from somewhere, most likely from altcoins. That's what's happened over the entire history here. Now, the hopium, if you're just new here, like the video, subscribe to the channel. The hopium that we've been following for this chart is that we're still seeing lower highs continue to form since 2022. So USDT dominance has been on a significant downtrend. We're still putting in lower lows. And because of this last high that was a lower high, there's a little more chance. I've got the probability slightly on the favor that we're going to break down from these lows here at 3.7. But that's providing we break down from 4.5% relatively soon. It needs to get under these levels. Otherwise, as I just said, it's going back up and breaking the 50%. You can see just how well it's respected all of these lines across the last 7.5 years of history, going back to the 2017 all-time high for Bitcoin and the low there for the USDT dominance. So the hopium, again, is the breakdown here, and then the breakdown of 3.7%. That would be absolutely mental underneath the 3.7%. It would be similar goings here if you put the stable coins together, USDT and USDC. Breakdowns here, that is going to send your crypto's absolutely flying. To me, I've got this as the blessed bull market. You get into this position here between 3 and 5% dominance for the combined chart of USDT and USDC. Absolutely, in my opinion, absolutely blessed. Take the friggin' gains. Don't get greedy. It's unlikely to stay down here and then continue to go down. This is just a dominance chart between 0 and 100. So it's going to oscillate between those levels. It's pretty unlikely now that we have so much more money in the system that you would see the USDT dominance come back into these zones. Of course, nothing is impossible, especially if we've seen a beautiful double top at the 50% level. Here's the 50% of the entire range, double topping and coming back down, breaking 50%. So it's not impossible for it to get that low, and that would be absolutely insane. And you'll be thinking, why the hell did I sell out in this zone? It's just the probabilities are unlikely that it would get this far down. We've got plenty of signs to have a look at on the way, but yeah, this is my little blessed zone. I'm going to be taking everything I can if it gets that far. Otherwise, you're going to keep watching any of these support zones on the way down because it just has not been able to get past around 5% dominance combined. Speaking of dominances, ETH, Bitcoin continues just to hold out here over the last couple of days. Not really much is happening. It's come back up to try and test some of those previous levels at 2.6% and just grinding here. The good news is it's still above 2.3%, which is the previous low. So now it showed its hand, showed some strength. Can it hold out here? That's the game here for ETH. Can it continue to hold those gains? ETH USD is also at a precarious position, hitting dead on the 50% level again. So that was the down range. That's why it's so important to understand these 50% levels on the chart. They're good areas to take profit. They're good areas to take a loss potentially if the market's coming down, because once it breaks the 50% level, generally it goes a lot further. And then you've also got signals to get back into the market if, in fact, it does turn around and head back up. That's why we use the swing chart here to have a look at areas where you would start to see the trend turn green, gets you back into the trade. So for now, 50% level is held up dead on, and just waiting to see whether it can hold out here above 2,200. So that's the key level. The lows, the highs here, $2,200. If it can consolidate and keep going, that's going to be strength for ETH. And as we looked at with the dominance charts, some of these aren't looking as strong as we would like at this stage. Sol is one of those. It has broken some of the highs at the moment. It's been rejected again at the 50%. And I had these lines on the chart. These are the stuff that's been on the chart for months. I'd rather not see Sol versus BTC go under that line, because that means it's going to, over time, be weaker than Bitcoin. And you're better off not, well, depending on how short-term trading we are, it depends on the risk that you want to take. Short-term risk, bam. Sol outperformed, of course, in the last few weeks. So if you're short-term trading, that's a place you want to be. Speaking of Sol gains, you can check out the trading results in our free Discord. This is where the premium members are posting about their trades. Check out what they're doing here. Fanboy is taking a Sol 100x, 130% there on the little gain to the upside. So if you're short-term, as I said, that is going to be favorable. But for the long-term holders, it's not really in that position yet. The consolidation and the premium above the 50% is really the go-to point here. Sol's looking a little bit weak against BTC. Sui looking a little stronger because it's above the 50% of the entire range. But at the moment, just finding a little resistance here of the downtrend. So again, it's just in that position where it wants to break out or consolidate before any potential next move, I should say. And XRP is also above the 50%, but over the last couple of days, having a little bit of a softening here. So in terms of the USD charts, same deal here. You can see the softening there for XRP, just hit resistance there at about 260 and now back under the 250 level. So again, 50%. Sui, $4, sitting on that right now, so slightly stronger than the XRP chart and definitely stronger than the Solana chart. So Solana coming back up to try and get 195. Volume has dropped off. That's exactly what we've been talking about with the interest through crypto and Bitcoin on Google Trends. Exchange volume is up, but this is 2 days lagging. Liquidations have been met as well on the long side. So all in all, the market looks like it wants to come back. We've put in some significant lows. Bitcoin obviously still in the strongest position, and you can see that across the altcoin pairings as well. The overall cycle still looking well and truly on track. More gains, more upside still in play here. Stock market's also looking good, especially when we layer in the data over the last 150 odd years on top of everything else that we've also covered here on the channel. Like, subscribe, we'll be back with another update for you guys. Until then, take care and peace out.